What's up, everyone? All right, so I've got a great recap for you today. This was another roller coaster of a day. We had some huge volatility. This morning, when I first looked at my scanners, I saw at about 6:30 a.m. Eastern Standard Time that we had 3 stocks up over 100%. So I was like, okay, today's going to be another big day just like yesterday. But I wanted to learn from my mistake from yesterday. So what did I do wrong yesterday? Yesterday, if you didn't see on my recap, I went in on my first trade with full size. And I didn't scale in. I was just, boom, instantly in. And then when the stock reversed quickly, I was at my max loss in the first trade at 7 a.m. That's not good. So I said, today, start slow. And also acknowledge the fact that I'm not feeling very well. I have a headache. I've got the sinus congestion, sinus pressure. I'm under the weather. I'm not feeling great. So give yourself, just a little room to remember that your fuse might be a little shorter today. You might be more prone to get a little stubborn. And let's just start with smaller size. So my normal share size is 3,000 shares. I said, let's even bring that down to 2,000 shares first trade. Just break the ice. And on my first trade at 7 a.m., I broke the ice and I lost about 150 bucks. And I was like, okay, no problem. Doesn't matter. I go in for trade number 2. I lost another 150 bucks. Now I'm down 350 roughly. I was like, okay, well, 2 losses, whatever. Third trade, I make maybe 200 bucks. So I'm down, I think it was $182 if I remember correctly. So after the third trade, I'm down $182. And I'm thinking, all right, you know what? Okay, not great. It's 7 a.m. First trade down 300 or 150, down another 150, and then back to, this area, something like that. So I was like, all right, look, I'm breaking the ice. I now have taken my first couple trades. I'm getting a feel for the market. Yes, I'm going into the red, but I'm managing my risk. The first stock that I traded today was LYT. LYT is also the stock that I made the most money on, and that is going to be our case study for today. On LYT, I'm up just under $10,000, finishing $9,859.12. On the day, I'm green a little over $8,000. So I had a couple other stocks I traded, not green on all of them, but we'll go over all of these trades. We're going to begin, however, with our case study on LYT. So I'm going to put this into, I'll just go to slideshow, full screen, and let's jump in. All right, so how did I find LYT? I found it bright and early at, 6:30 in the morning because it was our leading gapper. LYT was the second leading percentage gapper in the entire market this morning. And at about 6:30, it was the number 1 leading gapper, up over 200%. Okay, so that's fairly straightforward. These are stock scanners that I have on my phone. We offer these scanners for Warrior Pro members here at Warrior Trading. But you can use delayed scanners with some market data vendors that are free, but they're delayed. These are real time. You have to pay for real time market data. It's just the exchanges make us pay for it, and then you have to pay for it. It's just the way it is. So, and by the way, we have to pay for each individual person using that data. They're very strict about it. They're like super intense about the data. Data. Okay, so step 1, find the stock. So found LYT, and then identify the catalyst, step 2. So I saw that it had news here, rallies more than 200% after launch of cloud infrastructure services. So I was like, okay, interesting. Next step, let's pull up the chart. All right, so I pull up the chart, and what I see on this stock is that it's a beaten up daily chart, a stock that has been, beaten into submission from way up here all the way down to $2. And I also noticed that on the S right here, it's a recent reverse split. So recent reverse splits are stocks that have potential to make really big moves because suddenly the float is significantly lower. In fact, when I was looking on the scanner and checking the float said it was, what was it? It said 100,000 shares, which I think is, I don't know. I checked on the SEC filings and it looked like 300,000 shares after the reverse split. But different market data vendors have slightly different numbers for it. Nonetheless, the float is super low. Okay, so what do we know about a low float stock? Float represents what? Supply. So here we've got supply, that's a U, and we've got float. And on this stock, it was, approximately 100 to 200, maybe 300,000 shares, which is an extremely low float, a very limited level of supply. Okay, so now on the other side of this equation, we have demand. All right, so demand is up here. Now, demand initially is caused by a news catalyst in a way. So we've got news that comes out, but news itself doesn't exactly make a stock go up. News comes out all the time. What makes a stock go up initially is when high frequency trading algorithms see the news headline and begin responding by actively trading in the market. So because trading breaking news is such a profitable strategy, these institutional traders have created high frequency trading algorithms that are searching news headlines in real time and are so smart they can execute trades instantaneously when the news comes out. And these guys are competing against each other for like, micro milliseconds, like just the tiniest little fraction of a second, a millionth of a second, they're trying to get in faster. It's so competitive that regulators have actually made it so each one of these market makers have to have the same amount of Ethernet between their market data server and the server coming off the exchange. Like, even if one is closer by a foot, it has to have an extra coil of Ethernet so it's even. They're really crazy about this. So, okay, so number one, news comes out, and that triggers, the trigger is then, high frequency trading algorithms, buy the stock up. That's the first thing that happens. And then what happens is we see the stock on our scans because now the stock is up, at 10%. When I see a stock up at least 10%, I now know it has potential to do something exciting because it's breaking out of sort of the standard deviation range that most stocks trade within. And then what I also notice corresponds with this higher demand is high relative volume. Relative volume is the ratio of volume today versus what's normal on a stock. So we see it's up 10%, it's got high relative volume, and this is typically going to be the most extreme when it's on a stock under $20. The lower price stocks seem to just get more attention. So all of this is demand. With this one, we had such a small level of supply that it created a massive imbalance and the stock starts squeezing. So when I pulled up the level 2, and I guess I could add, I analyze the daily chart and then I do check the intraday chart and I check the level 2 at the same time. My process is that I type in the level 2 to pull it up while the chart is loading, because the chart sometimes takes a second. So I looked at the level 2 and I noticed generally we were having like 5-cent spreads. 10 by 10.05, 10.28 by 10.33. So, 5-cent spreads. So a little bit of a spread, but not bad, nothing too intense. So I was like, this is all right. Okay, so now I'm looking for my first entry. Now the stock at 4 a.m. squeezed up. It had started its move after hours yesterday. It continued and squeezed up to a high of 11.50. Then it pulled back here, pops back up, pulls back, pops up, pulls back. So here's 7 a.m. So 7 a.m., I did not chase it right here. My first trade was a dip. I tried to buy a dip at 9 and it went lower. I was like, son of a gun. I tried to buy a dip, I think at 8.50 at the $0.50, it went lower. And then I got a dip, down around here and it bounced back up. So the dips didn't really pay off that well. It's not usually my first trade is not usually a dip. The reason is that dips, they are higher risk because you're buying something that's selling off. You're buying something that's weak. Now, I like dip trades because in the context of something that generally is strong but is having a momentary moment of weakness, that can be a spot to get in and then it rips back up. But in this case, the stock was kind of rolling over. It was below the volume weight average price, and there just weren't a lot of buyers on these dips. So it ends up going lower, whatever. I was only down $180 on it. But then at 9 a.m., it rips up here, and I traded it on this move up for about $500 of profit. I don't usually take trades on stocks below volume weight average price, but as a dip trade or reversal, I'll consider it. Okay. And then right here, I got in this with a starter of 3,000 shares. I scaled in until I had 12,000 share full position, adding as it broke 9, adding as it broke 950, and adding as it broke 10. And on this trade right here, I made basically all of my profit on the stock. So I was only up, maybe $500 before this trade on it. And then on that break of volume weight average price, I made almost 10 grand. That was a phenomenal trade. Now, currently it's sitting at $11.27, so it's still holding up. It's up 400% right now, and the stock is doing well. In fact, I would keep it on watch for potential moves later in the day. To get zoomed in on my trade, we had the squeeze up, the pullback, and then I was taking the break of VWAP, and this trade had high volume. These super high volume candles, I mean, the volume was going. So this thing was moving. And that's what gave me the conviction to take as much share size as I did. So it rips up here. Now, when the MACD crossed over, I was like, okay, we might be coming to the backside of the move. Let's not overstay our welcome. By the way, real-time example here. So I'm just going to pull up LYT. LYT just in the last couple of seconds popped up here to 12 and then drops back down to 11. So you could see it's starting to come back up. It's trying to reclaim these areas. It's above VWAP right now, but it has a high a day of 14, way up here at 14. So it does have some room. Now, by the way, so then at the open, it squeezes up here into a halt, and I bought 1,000 shares going into the halt, but it was small size. Anyways, it opens higher, it dips down. I did make a little bit on this move here. So I guess I didn't make the full 10,000 on that break of VWAP, but, or where was it? Yeah, right in here, sorry. But in any case, nonetheless, I did fairly well on it through those two moves. We did peak at a high of 14. I recall having a nice dip down here off this double bottom. So double low here, double bottom, bought that dip, and we got a squeeze all the way up to 14. But I was trading with smaller size at that point because I didn't want to risk screwing up and doing something silly. So I would also note that on the daily chart, we've got a good amount of room up to our 200 moving average, which is at almost $27 a share. So that's the 200 moving average. We've got a good amount of room there. I was aware of this resistance here at 1338. High volume red candle, super high volume. Right now, even though we have 29 million shares of volume on the day, today's a small green candle relative to the volume of that candle. Now, that was prior to the split, so the volume's been adjusted. This split was a ratio of 60 to 1. So the volume that happened here is 60 times, showing 60 times higher than it actually was. But, it's all adjusted because of the split. So going back to our slide deck, so slowed down once the MACD crossed over, got a couple more trades on it, but locked up just under $10,000 of profit. And in hindsight, I'm happy with how I traded this. I really, there's not much I would do differently. This was a pretty solid trade. Of course, could have bought more shares as always, and therefore maybe made more money. But for my risk tolerance today, where I was at, I was happy with this. Okay, so that was my, so that's the case study of my trades on LYT. So we'll put that aside for a moment, and now we'll look at the other stocks I traded. So LYT was the first stock I traded and the last stock I traded, but I traded a lot in between. And we actually had this morning a kind of unbelievable move on CERO. But you'll notice that I'm only up $300 on it. So CERO does almost like the unthinkable. It did something I've never seen a stock do before. So it starts squeezing up here, and this stock goes up to 6. And right here on this micro pullback, I tried to buy at $6, and I filled at on my order at $6. Just this also, it's not a big deal. I don't have, there's nothing you could do about it. It just is what it is. But I'm going back to that first trade. So on my first trade, let's see, I filled right here 378 shares of a 2,000 share order. And then I filled 205 shares of a 2,000 share order, or 1,000 share order at 955. So I wanted to be in. And if I had bought the full 2,000 shares of this at 6, well, holy smokes, this thing went from 6 to 10. So that's $4 a share. That's $8,000. And then it went up to 15. Then it went up to 20. This thing actually literally went up to $28 a share. It went up over $22 a share. Now, even if I had filled the full 2,000 share order, I wouldn't have bought here and sold here at the very top. I certainly would have been scaling out on the move up, but it's still annoying. So I made about $5,000 on this move. And then it sold off here. It comes back up, sells off again, goes sideways. And right in here, it was consolidating right here. And I was like, okay, I want to get in this. Here's the problem though. If I press the buy button on this right here, I'll just show you as an example. So I'm going to put this up here, right here. So if I put a buy button, if I press the buy button on this, put an order at $20, what's going to happen if I press that buy button? I'm going to get filled, right? Wrong. Risk check failed. See, risk check failed. It is not going to let me get filled. I can press it as many times as I want. I will not fill shares. So that's what kept happening. And it's because even though the stock was, it was trading at like 18 and I had my order at 20. So I was like, all right, I'm looking for, a squeeze through 20. So I had my limit order at 20 right here at $20, but it kept rejecting. So finally I said, you know what? I'm just going to punch it with my hotkey shift 1. And I bought 2,000 shares right here. And I was looking for that break at 20, 24, 26. And on this candle, it dropped to $15 and I lost $4,500. So I didn't really want that many shares, but I just got impatient. And anyways, it is what it is. So that was disappointing on CERO, and it ended up selling off. It sort of held up, and then it rolled over here. And it rolled over here almost exactly when LYT started to squeeze. Traders gave up and switched to something else. So, and look at this, LYT, son of a gun. All right, so this is squeezed up to 14. So let's watch this. Interesting. It's showing a 1350 resumption right now. So a lower resumption, maybe, 14, it's jumping around a little bit. That's going to be something to watch. The challenge always is when to walk away to avoid giving back profit. So I started the day with my first trades going, down in the first 3 trades minus $182. And then I had a loss on, I think it was MSAI, and that brought me down to minus about 800. I was down a little bit more than that. And then I had this trade on APVO, and I was down 3,500 on the day, just about. So I was down 3,500 on the day. And from that point, that was about when LYT started, and I got the move on LYT, which put me in the green. So this is also not to mention that for a moment, I was up 5,000 on CREO, and then I gave it right back. And on MSAI, I was also for a moment up about 3,000, and then I gave that back. So today was a day where my P&L was jumping around a little bit, and the reason that was happening was because I was trading stocks that were really volatile. Obviously, LYT is very volatile. MSAI, let's see. So MSAI right now, I'm down $130 on it. This one sort of similarly, it popped up. It started to squeeze. I jumped in it at about, I can't remember, it was about 5. It goes up to 6. I take my profit. And then I got back in for the break of 6. I stop out. And then I ended up buying like right here, a moment after I stop out. I get out here. And then, I do another dip and I'm red on it. Like I was just all over the place on this stock. So made 2,700 and then back to flat. And then made 3,000 and then was back to flat. CERO, same thing, made 5,000, then was back to flat. OMH only made $14 on that, doesn't matter. CELZ, this one I traded closer to the open and made 1,500 on. We got this squeeze into a halt and then a little dip and rip up to a high of 1050. But to be honest, this was the best setup on that. None of this was super, super clean today. We really had a lot of chop, and so it wouldn't have been difficult for this to have been a red day for me. I could have easily had a big red day. I'm grateful to be green. I don't want to overstay my welcome, especially when I'm not feeling well. I definitely have a headache. I'm probably going to take something for it in a little bit. So today, I'm just going to try to be consistent, lock it up, be green. I could have been red. I could have been red 3,500 APVO, by the way. I didn't show you that one. The biggest loser of the day. APVO, just trash. I mean, this thing was garbage. I got in here on the first pop. I get out basically break even, and then I got back in as it squeezes up here, and then it, flushes right there. And it's just really difficult price action. The challenge is when you have something like CERO, you're trying to find the next one. And that's where I was having a little bit of a hard time figuring out which one's going to be next. And it kind of surprised me that LYT ended up breaking VWAP because it seemed really bearish earlier, but the float's super low and it broke and off it goes. So now you've got a high of 1420, but a bid right now of 1358. And this is what I'm talking about with the risk of the spread. So this is a dip. So right there was a dip. And could I have punched it? Yes, but you could see how just in moments, if you time that wrong, it's the difference between being up or down $1 a share. And I sort of feel like there's a time where I like to push it and lean in, and then I also want to be careful about overstaying my welcome because it's just so easy. Next thing you know, you break the ice with one more trade, and then you catch, whoa, look at that, right? I look away for a second, it's back at 1380. So, you catch a flush like that, and now you're regretting it. You're like, I took 2,000 shares, I just gave back $4,000. I gave back half my day in one trade. Why did I do that? So we've all been there. You have that happen enough times, you're gonna start to teach yourself to walk away. And the word of wisdom is that nobody thinks about where a taxi goes after you get out. It doesn't matter. Don't worry about where a stock goes after you get out. If you walked away with some profit, I'd say you did pretty well. So I'm gonna lock it up here, $8,000. It's another green day. Right now on a nice hot streak. I've got 4 days into today's fifth day of March. So have been above the daily goal just about every day. Some days I'll be a little below it, but I've been just really smooth and steady here, super consistent. And I've had a couple close calls yesterday and today. Both of them could have been red days, but we had enough opportunity that I was able to keep trading. I was able to get myself in the green. And so that means as long as I don't go too deep in the red, as long as we've got good opportunities, I should have a chance at redemption. So thanks as always for tuning into this recap. I hope you hit the thumbs up. I hope you're subscribed to the channel. If you're not, make sure you smash that subscribe button, and I'll see you for the next episode first thing tomorrow. All right, have a great day. Reminder as always, trading's risky. My results aren't typical, so take it slow and manage your risk.